It's about that time of day again here, folks. Welcome back to your nightly newsletter, boys and girls. My name is Joseph James. It's Tuesday evening, March 24th, 2015. In tonight's newsletter, and we get a doozy here for you guys and gals. Crude oil, still bullish, but trading sideways. And you're going to see quite a few of these trading ranges this evening. Markets are definitely range bound here, most of which, though, are on the bullish side. Crude oil starting out on a bullish tone here this week. We got a little bit of a sideways range on crude to watch for tomorrow. So be watching for those breakouts of that trading range. We're going to stick to the buy side, and it does look like crude oil pushing up to 49 and possibly seeing a test of 50 later on this week. We get a plan for crude oil later on in this video. Stick around for that. How about some gold? Gold also bullish on the way back to its big round number at $1,200 an ounce. Now we're waiting for deep pullbacks on gold right now as we go back to 1,200. But just like crude, gold also has a specific trading range that we're going to be using for the biggest clues ahead of tomorrow's session. Stay tuned for more on gold. How about the Russell? Russell is also very bullish here. Russell also trading sideways. Our plan is the exact same thing. We're going to use that trading range to find the best opportunities to buy at support. Waiting for that breakout, though, on the Russell as we continue to try to push higher here. As you can see, we've got a bunch of bullish markets. We got 3 different trading ranges to show you guys for tomorrow, and we get a great newsletter plan for you guys and gals this evening. Before we begin, though, I want to make sure to remind you to watch this video on our trading blog here at SchoolOfTrade.com. Our trading blog is at sidewaysmarkets.com. Head on over here to sidewaysmarkets.com, and we'll make sure there are 3 reasons why you should be watching this video on our trading blog. The first reason is you can download all of my charts. That's right, all the charts I'm going to use here in this video this evening. You can download all those charts by following that link right below the video. Second thing here, I'd love to give you a free pass to come out and test drive our live trade room as a guest. If you're not a member here at SchoolOfTrade.com and you'd like to see what is all the talk about, why are we the fastest growing trade room on the planet, I got a free pass, and I'll show you exactly what we're all about here. All I need you to do is click on that little free pass in the upper left-hand corner and give me your name and your email address. And then third thing here this evening, right above my ugly mug in the lower left-hand corner, all I need is your name and your email address, and I'll send you an email every evening right around 8 p.m. Eastern Time when we send out our nightly newsletter. That way you never have to worry about missing another newsletter video ever again. Guys, 3 reasons why you should follow the link below the video description if you're watching it on YouTube. Get over here to sidewaysmarkets.com, download those charts below the video, grab your free pass to attend our trade room as a guest, and of course, register for our nightly newsletter mailing list. Now guys, if you grab the free pass or you register for the mailing list, just be aware I'm going to send you a verification email to make sure that I have the correct email address, to make sure you're not a robot, and to make sure we have approval to keep sending you emails in the future. Alrighty, get your helmets on, seatbelts fastened. Another great day today. A little bit low volume still. Feels like the markets are trying to get themselves kind of out of first gear here after quadruple witching last week. Maybe it's the amazing weather we're having here around the country. Springtime is kicking into high gear, that's for sure. Let's start out here with gold. Gold is a very bullish market. We can see a long-term bull channel here on the gold. We're right up around those highs. We can see a definite long-term channel, and then we can see a definite short-term trading range. Both of these are big clues. The long-term trend is up. That means I'm erring on the side of the buy side, right? So the long-term trend tells me what direction I want to be trading in. The trading range tells me where to be looking in that direction. Okay, so obviously with that trading range, I don't want to buy into the highs. If we go higher, I'm buying on a pullback up to 1,200. If we keep going, I've got some additional extension targets waiting for you. But if we go higher here, breakout, pull back, it's a breakout, pull back. You can learn all about that pattern by taking our free trial. The second opportunity here would be if it goes lower, look for a bear trap. There's the second opportunity. Look for those bears to try and sell below the 86.3. That'll give you a chance to be a buyer as well. And then if we go right through that low down to this 1182 even, You guessed it, that's another buying opportunity. That's a trigger zone buy. It's a channel low buy. It's also a breakout fade. So 3 expected opportunities here. First one, breakout pullback. Second one, breakout trap. Third, breakout fade, trigger zone fade. And of course, targets running up to that 1200 right now. Hold on to that runner, because that 1200 is only a hop, skip, and a jump away. So again, waiting for pullbacks to buy. The best opportunity is here to be a buyer. We'll be buying down around these lows. But if we don't get the price to come back to us, we know that if we go higher, breakout pullback. And if we do happen to rattle around inside of this trading range, we'll definitely be looking for those trap opportunities down at those lows. Remember, state of the upside here on gold, and look for opportunities to get long when those sellers are trying and failing. Should we keep going here? Don't forget, you can download all these charts, and you can trade this stuff with me live tomorrow morning in our live trade room. Come out and see me. How about some price action? Now we're going to zoom in a lot closer on that trading range. Right, so here's that trading range that we found here, right? There's the trading range. Let's zoom in a little bit closer now on that trading range. Take a look at what we have to work with here. So as you can read in the upper left-hand corner here, we're definitely bullish, right? There's no doubt about that. We definitely have a bullish channel going into a now range-bound environment. Moving averages flatten out, double bottoms, double tops, a little bit of a triple top there. This is definitely our trading range. We can also see here a small little micro channel in here. We did break and run back to the highs. That definitely tells us that we are bullish, and also look for possibly a measured move as we go higher here. Members, if you are with me on this one, you know exactly what I'm talking about. That channel break, and then again, look for a measured move, that extension up top there as a target there. But we want to pay attention to that trading range. Our goal right now on gold is to use the trading range as our guide and look for buying opportunities at support levels on the way up to 1200. Okay, so again, just like we saw on that first chart, we have 3 basic scenarios right now. Scenario 1, if we go higher, is a breakout pullback. Target up at 1200. Range expansion target 1202.4. That'll be the easy one. As price goes down, we get a potential for a trap. It's very, very simple. We're just buying at all of these support levels. If we happen to really tumble, we'll have the opportunity to fade 79.6, fade 76.9. So bottom line is we are definitely sticking to the buy side right now on the gold, and if we go higher, we'll look for the pullback after we break above the highs. If we push lower, we're looking for traps and fades. And of course, don't forget about those range expansion. You've got range expansion targets here below at 76.9. And of course, up top here at 1202.4. Alrighty, whatever you do, don't buy that high and don't sell that low. Stay away from those edges. Look to buy the pullback and look to buy the lows. Don't forget about that. Let's keep moving. On the gold, we know what our plan is for gold. Stay to the buy side and use that trading range. How about some Russell? Moving forward here quickly on the Russell. Russell is bullish. And boy, is this starting to sound like a broken record. We get a lot of this going on right now where we have this bullish trend. And then this has really been kind of the personality of this week so far. If you've been with me in the trade room, you've seen this. It's been just really sideways, real slow, real sleepy. You know, I think we saw an average about 15% below volume averages yesterday, and volume was about 8 to 9% below averages today. So we're getting back on track here, but it's definitely been a little bit of a sleepy start here, almost to the beginning of the second quarter. We got one more week left in this first quarter. We'll get that second quarter started. But you know, the reality is it definitely appears people are sitting on hands a little bit of analysis paralysis after that quad witching week last week. We know we got a bullish trend. We get a sideways range. Very similar here to gold. We know we have the bullish trend tells us what direction to move in, right? We're looking to be a buyer. We know the trading range tells me where to be looking for these buying opportunities. And again, same thing as we saw on gold. If we go higher, breakout pullback. Target up here at the range expansion, target at 1271, 1272. That'll be an easy target for you for your range expansion. If we go lower, we're looking for a breakout trap. If we go lower, we're looking for a breakout fade. If we go lower, we're looking to buy that range expansion support. So we take out the trading range, project higher, project lower. I'm going to buy the support level down bottom, use the target overhead. And again, follow the trend. Trend is bullish here right now. If we go up, buying a pullback. If we go down, looking for a trap. If we go down, looking for a fade. If we keep going, looking for that range expansion support. And we'll continue to be a bull until we see it go lower, come up, and then give us a lower high. Once we see that lower high and the continuation to the downside, that's when we know these buyers have failed. So we are well ahead of that mark right now. I wouldn't be worried about being a seller here anytime soon. Remember, state of the trend, bullish trend here on this Russell. And again, more ideas of that trading range, right? Here's the strategy for that trading range. Very similar to gold here. And you're going to see this is pretty consistent across the board right now for gold, crude, and Russell. Again, we got that bullish trend. There's no doubt about the fact that we get a bullish trend here long-term on the Russell and most of the other E-minis right now. And then we kind of break off into this sideways range. We take that sideways range, copy and paste it, copy and paste it, copy and paste it, copy and paste it, right? So now we have range expansion supports, range expansion resistance. In this bullish trend, you know what I'm going to say. If we go higher, breakout pullback, target is up at the extension highs, right? You get those targets waiting for you. If we go lower, trap, right? If we go lower, trap. We look for those sellers to try and take it lower. Big green candle triggers the entry. And of course, we'll take it back higher again. If we get the trap, you've got targets back at the top of the range, targets at the range expansion, targets at the range expansion. Okay, very easy stuff. We teach you guys all this stuff every day at School of Trade. And of course, as we go lower here, breakout fade. Got a pretty nice little double whammy here. We got a little support level here, little swing level there, as well as, as well as the range expansion support. So we got a great spot here if price goes lower for a nice fade. If we do get the fade on this, don't forget it's a little bit different trade management. You're going to have target at the low of that range, target at the high of that range, and target at the range expansion if we get the breakout fade. Make sense on that? Remember, state of the upside here on this bullish trend. Even though we're going sideways right now, give the trend the benefit of the doubt and stay focused at buying at support levels. And make sure you remember, do not buy the highs or sell the lows of this range. Stick to the positive side, stick to the bullish side, and look to buy at support levels wherever we find it. Don't forget, come out and see me tomorrow morning in my trade room. We'll walk you guys right through how we're going to trade this Russell. And then how about this crude? Another scenario here where we have a bullish trend in the long term. We see the big long-term bullish channel. It's very easy to see this bull trend across the board today. Crude, Russell, and gold. Very easy to see this bullish trend. Long-term channel, short-term channel. And what's very important is this short-term channel did break back here. We retested the highs, looked for a measured move up to that 49. That's why I said earlier, it looks like we are most likely going to see 49s here before end of the week. We do have inventories tomorrow morning. We'll have to wait and see how that plays out for a Wednesday morning. But that's the way it looks right now. And again, with that short-term bull channel, that break of that short-term bull channel right there, goes back up, shows strength from these buyers. Look at this measured move going higher here, target up at 49. Okay. On top of this bullish trend, we see, yep, I know, right? Is this the same thing as gold and Russell? Pretty much. We got that trading range now. Remember, 3 ways to trade this range. Breakout pullback, target at 49.04, target at, shouldn't say that. Breakout pullback, target at 48.56, right? That'll be the range expansion target. Measured move target 49.04, and then range extension target 49.56. Those are my targets above. We go higher, breakout pullback. We go lower, breakout trap. We go lower, breakout fade. It's going to be a while before these bears take back control again. Basically, what we need to see is, if these bears are going to grab this thing back again, we're going to have to see it go lower, try to go higher, and get a lower high, right? That will be when we start to think this thing is bearish here. As of right now, this is just a pullback off those highs in this bullish trend. I need lower lows and lower highs after the buyers try to run it back up again. That's what I'm going to be looking for to even start thinking about this becoming a bearish move here. All right. So remember, err on the side of caution. The trend is your friend. Give the benefit of the doubt to that trend going into that trading range. Stick to the buy side and buy at support. Buy at support. Do not buy those highs. Do not sell into those lows right now. Let's take a closer look here, though, at this trading range. And again, pretty much the same thing we've seen across the board here. Literally, you could look at this and say, which chart is this? It looks very similar to gold and Russell. Makes my job very easy, obviously. Makes your job very easily. We know exactly what our plan is right now. We know we have the bullish channel. We know we have the bullish trend. This bullish trend leading into this trading range, that's what tells us to be looking for the upside, right? That's what tells us to stay to the buy side right now. We flatten out, double tops, double bottoms. You can see, this is even a reversal line here from last week or earlier this week, and there's your trading range now. The bullish trend leading into the range tells me what direction to be trading in. I want to be a buyer. The short-term trading range tells me exactly where to be looking for buying opportunities. If we go higher, breakout pullback. We have targets waiting for us at 48.52, 49.27. Those are range expansion targets, which just so happen to line up with that range high as well. So I would say 48.52, 49.27. Again, if we do break out to the upside, breakout pullback. If we break to the downside, breakout trap. Okay, if you get a breakout trap, your targets are back at that high of the range and at the range expansion target. Last but not least here, if we don't get a trap, if it takes off the downside, we'll look for a fade. Targets here on your fade are going to be the low of the range, the high of the range, and if you got a bullet left in the gun, leave a runner up to that range expansion resistance here overhead. And same thing if we go lower, right? 46.54, 45.86. Those are excellent areas for additional fading opportunities here. Wait for that price to come down. Fade that 46.54. The term fade is used to describe how I'll be buying as the price goes lower. That's what I mean when I say the word fade, F-A-D-E. All right? So we're looking to fade that move lower. That means buy at support as the price goes lower. Again, using the benefit of that long-term bullish trend as our main guide. If we do grab the fade, don't forget targets at the low, target at the high, and target at the range expansion. Just a heads up for crude oil, tomorrow is Wednesday. We have inventories on crude oil tomorrow morning at 10:30 a.m. Eastern time. Don't forget about that. Make sure you're aware after 10:15 tomorrow morning, sitting on those hands tomorrow. So get to it early if you're trading crude tomorrow morning. And don't forget, you're not alone out there trading any of these markets. Come out and see me anytime here in our live trade room as a student here at SchoolOfTrade.com. And don't forget, guys, before we wrap up today, don't forget, download the charts below the video for tonight. Have those ready to be using with me tomorrow. Grab your free pass to attend our trade room in the afternoon. And, of course, register for our nightly newsletter mailing list. If you happen to stumble over here to SchoolOfTrade.com, please don't forget, we have the best free trial in the business. I'll put my money where my mouth is on that one. I'll prove it to you. Register for the free trial, and you'll see exactly what I'm talking about. You're going to learn more in a week with me than you've learned anywhere else on the internets. I will tell you that right now. We have 3 levels of membership: beginner, intermediate, and advanced membership. And we also have someone standing by 24/7, 365 to give you guys a hand with any questions that you may have. Guys, my name is Joseph. Thank you so much for tuning in tonight for our nightly newsletter. I got to run for now. We're planning a big move into a new house this week, and I am busy at night right now. Hope you guys had a great day. Tuesday, be ready for Wednesday. Inventory again. Like I said before, inventory is on crude oil tomorrow. Okay, come out and join me for more information on that tomorrow morning. And we'll see you guys same time, same place tomorrow. Right? We'll see you in about 23 hours from now. Same time, same place. You guys be well out there. Be nice to each other. And I'll see you guys in the morning, 8 a.m. Eastern time. We open up our trade room. If not, I'll see you back here for another newsletter edition tomorrow night. Adios, amigos. Bye-bye for now.